Okay, let's talk about 2025. Something truly extraordinary happened. An asset that's been around for thousands of years suddenly started acting like a hot new tech stock, absolutely smashing records and leaving experts stunned. We're talking about gold. And today, we're digging into the incredible story behind its record-shattering year.
Let's just cut right to the chase with the headline number. In the final quarter of 2025, the average price for a single ounce of gold hit $4,135. I mean, that's a 55% jump over the previous year and a brand new all-time high.
And get this, it wasn't just about the price. For the first time ever, total demand for gold, and this includes those massive, private, over-the-counter trades, surged past 5,000 tons. The scale of this is just on a whole other level. So you have to ask, why? What on earth was going on?
Right, what powerful forces came together to create this perfect storm for gold? To really get what happened, we've got to look at the key drivers that basically lit the fuse on this whole explosive rally.
All right, so let's break this down. It really was a convergence of a few huge factors. First up, you had all this geopolitical instability making investors pretty nervous. At the same time, central banks all over the world were just snapping up gold, trying to diversify away from the US dollar. And then, the third piece of the puzzle, governments were spending like crazy, which got people worried their cash would lose its value. They went looking for a safe place to park their money, and gold, well, it became the obvious go-to answer.
So, okay, we know the why, but what about the who? Who were the key players really driving this thing? I mean, who was in the engine room of this historic demand? And the answer, well, it shows this really fascinating split in the market.
And the sheer scale of this is it's staggering. If you look at the data from the World Gold Council, demand in 2025 didn't just kind of sneak past the old records. No, it absolutely rocketed into a whole new territory. We're talking a total value of an unprecedented $555 billion. Just mind-boggling.
And when you break down who is actually doing all the buying, a really clear leader emerges. Look at this, investment demand. We're talking things like gold bars, coins, and those funds you can trade on the stock market. That made up a whopping 43% of the total. Sure, central banks were big players too, at 17%, but the real story here? It's that massive rush from investors.
And this right here, this data, it really reveals the great divide of 2025. It's like a tale of two different markets. On one hand, you had investors piling in, pushing demand up by a crazy 84%. But on the other hand, your traditional buyers, people buying jewelry, they got totally spooked by the high prices. Jewelry buying actually fell by 18%. So this wasn't everybody jumping on the bandwagon. This was a really concentrated, investor-led surge.
But here's the thing. What happens when an asset gets this popular, this fast? Well, with record highs comes some pretty extreme volatility. And it creates this fascinating ripple effect for the companies that actually dig this stuff out of the ground.
Yeah, the ride to the top was anything but smooth. I mean, at one point, the market shot up 25%, only to be followed by a sharp 13% drop. Analysts have a name for this. They call it a salutary correction. Basically, a healthy shakeout that gets rid of the pure speculators and really tests the nerve of the long-term believers. It's a huge reminder that this kind of rally comes with some serious risk.
Okay, now this is where it gets really interesting for the actual gold mining companies. They benefit from this thing called operational leverage. Let me break it down. It's pretty simple. Their costs to mine an ounce of gold are more or less fixed, right? So when the price of gold goes through the roof, almost all of that extra cash flows straight to their bottom line. It just amplifies their profits like crazy.
And you can see that leverage in action right here. It's so clear. While the price of gold itself jumped an incredible 65% in 2025, look at the stock market sector for precious metals companies. They shot up 155%. See, they didn't just ride the wave. That operational leverage we just talked about let them supercharge their returns.
So after a year like 2025, the billion-dollar question, or maybe the trillion-dollar question is, what happens next? What's 2026 going to look like? And on this, believe me, the experts are totally divided.
So, in the super bullish corner, you've got the heavyweights like JP Morgan. Their head of global commodity strategy, Natasha Kanavala, basically thinks this party is far from over. She believes the trends are still strong and forecasts that demand is just going to keep pushing prices even higher.
All right, so let's lay out the two competing visions here.
The bulls, they believe that this powerful momentum from investors and central banks is going to keep going, especially if interest rates start to fall. But the cautious view, they're warning that all that recent volatility might be a signal that the market's gotten a little overheated. Plus, that weak demand from sectors like jewelry could put a ceiling on how high prices can really go.
So what does this actually mean in terms of cold, hard numbers? Well, JP Morgan is aiming for over $5,000. Credit Mutual is a bit more conservative, seeing an average around $4,500, and then you have this momentum model from Orthgar Effer suggesting another 20 to 25% gain is in the cards. So there's a general feeling prices will stay high, but a lot of disagreement on just how high they can really climb.
And all this brings us to the final and maybe the biggest question of all. Are we just watching another cyclical boom and bust play out, or is something much more fundamental changing about gold's role in the entire global financial system?
You know, according to some analysts, the sheer intensity of this rally just feels different. It's not like that slow and steady climb we saw back in the 2000s. The speed and the power are drawing comparisons to the last great gold bull market of the 1970s, and that was a time of massive economic change.
If you look at gold's history, you can see these really long cycles. After that 70s boom, you had what some people called the Great Abandonment in the 80s and 90s. Then, a steady comeback started in the 2000s. So the question this timeline really asks is, does the surge that started around 2015 and just exploded in 2025 mark the beginning of a totally new era for the yellow metal? And that leaves us with this one last thought. You know, for years, a lot of people saw gold as, well, a relic. But in a world filled with geopolitical tension, soaring debt, and big questions about the future of money itself, central banks and investors are turning back to it with a passion we haven't seen in half a century. So the question isn't just about the price anymore. It's about whether gold is reclaiming its ancient role as the ultimate financial anchor in an incredibly uncertain world.